everyone, welcome to our channel. I am Hema Hodehusur, equity trader, option trader and the mentor of Shakti Institute of Financial Markets. So today's topic is about the Supertrend and the moving average, as many common traders have at the initial stage have the problem like which indicator has to be used for intraday. So one common indicator which can be used is the Supertrend and the moving averages. The super trend will be used only when the market is in the trending, either upside or downside. So let's start, and before I start, please share and subscribe our channel and comment on our videos. And if you want to join our courses, you can visit our website, that is www.sifminstitute.com, or else you can contact us at 9686199524. So let's start. The power of super trend and moving average for intraday trading. So what is super trend? Super trend is a trend following indicator similar to the moving average. So it is similar to the moving average itself, and it is very simple indicator. The simplest indicator used by many of the intraday trader is the super trend indicator, and it is formed with the help of two parameters, that is period and the multiplier. So this period and the multiplier is nothing but the ATR, that is average true range, and the multiplier which calculates the volatility of the stock. Okay, and whenever you put the super trend in your software, it will come default as parameter as 10 for average true range and 3 for the multiplier. I will show you how it will be seen in the here. So how to use the super trend indicator? So you came to know what is super trend, and this trend will be helpful in the trending market, either upside or downside. So in that market you can use this super trend indicator. So to use this indicator, you have to open a chart of a particular stock, and you have to set the interval time of 10 or 15 minutes. Usually 15 minutes is good for intraday instead of 10 or 5 minutes, because in 10 or 5 minutes what happens is you may get the false candle also. The 15 minutes candle will be the accurate one. So how it will look and how to add in your software, I will show you. We are using the Upstocks. In Upstocks we trade, and here it is very good. It is a very good platform. So if you want to open an Upstocks account, you can open through the link which is mentioned in our channel. It is very simple steps are there to open your demat account. Just your PAN card, Aadhaar card, bank passbook and photo is enough. So digital signature will be there, that you have to do it there itself. It is very easy, and the charges are also very less, and it is user friendly also. So if you want to open a demat account through us, then you can click the link which is in the below. Okay, so how to add the super trend here is, just go to study. Fine. So if you go to study, here it will come, and here you have to just type here super trend. If you just type here super trend, by default it will come like this. You can see here the line, the red line and the green line. So this is the super trend. Okay. So this is the super trend, and you have to use the 15 minutes chart. Period will be there, timing minutes. So here 1 minute, 3 minute, 5 minute, 10 minute, 15 minute, 30 minutes, 1 hour, 2 hour, 4 hour, 1 day, 1 week will be there, and 1 month will be there. So for intraday you can use 15 minutes. It is more accurate than 5 or 10 minutes. And if you want to hold it for a longer period, for a full day, then you can go for 30 or 1 hour. Okay, and for positional trading you can use this day, and for swing you can use day, and for positional trading you can use week, and for long term you can use 1 month as the timing. Okay, so 15 minutes chart. Then how to identify the buy and sell signal using the super trend indicator. So now you came to know that super trend is used when the market is in the trending. So how you will come to know that it is a buy or a sell. So the buy or sell signal can be easily identified when the indicator flips over the closing price. The buy sell is generated when the super trend closes below the price and the color it changes to green. So whenever the color changes to green on the when the price is below the closes below the price, then you have to buy it, and when it closes above the price, then it turns into red. That time you have to sell it. You can see the chart. This is the above the price and it has come down. Once it gives the sell signal, it will come down, and sometime it will be in the sideways zone, and then again it will come down. So here again the price is on the lower side and it has given you the super trend again buy. So again this is the buy side. So here in the chart also you can see, here you can see there is a, this is the sell and this is the buy. Fine. With this you can also add one more parameter which is called as the moving average to get more accurate for trading. So one is super trend, you can put it, and the another one is moving average. Moving average is the statistics which calculation is used to analyze the data point by creating a series of average of different subset of full data set. So there are two types of moving averages. One is simple moving average, which will give you the prices will be given over a number of days in the past. So it will calculate on the number of specific days like 15 day, 30 day, 100 day, 200 day moving averages. And another one is exponential moving averages, which is a weighted average that gives greater importance to the price of the stock in more recent days. So this indicates that it is more responsive to the new information. So if you are using the exponential moving average, then it will be more accurate than the simple moving average. So there you will be having 10 day, 5 day, 20 day, 30 day, 50 day, 200 day moving averages. So in this, how to put, so here you have to go again to the studies and you have to click here moving average. If you just click here moving average, it will come by default. You can see here the line. So 1 and 2. One more you put. Okay. So here the moving average is, two moving averages are there. You can just click on this and change to 10 and change the color to green, because you have to identify which one is this. So green is the 10-day moving average. So here you can see, and this one you can take it and let it be red itself. Fine. So here you can see. So this is an intraday chart of the Nifty. So here you can see there is a super trend sell. So here it is a sell call, and the 10-day moving average has and 20-day moving average both are there. So this 10-day moving average and 20-day moving average are going to cross here. So 20-day is crossing the 10-day moving average. So whenever the 20-day crosses the 10-day moving average, it will come down. So this is a double confirmation which you can do. So if you would have sold the Nifty here at what 15,000, at 16,000 levels, then you would have got up to 16,700. So here you can see up to 16,796. So up to here you could have got the profit. So here is the sell and here is the buy. So this is for the short call. You can buy put also here. Nifty put you could have bought of 16,000 put you could have taken, and up to 16,793 it has come. Okay, so the what will be the stop loss for this? So you have bought it, and whenever you trade or buy these shares or sell these shares, I mean short these shares, then you have to put the stop loss. Without stop loss you should never do intraday. So for that the stop loss will be this, the high of this. Okay, so the high of this is 16,049. So 16,049 will be your stop loss, and your buying price will be here, this 15,944 will be your selling. You'll be shorting it, and you will cover it at 15,700 and okay 15,800 you think. Okay, so here this will be your stop loss, and in the same of one day, and the next day is this. Here you can see, here it was in the no trade zone. First candle it was a bullish, then a bearish, then again a bullish, and it was in the no trade zone, and later bit it came down, and then you can see the super trend red has changed to green. Yes, after four consecutive green candle, and this is the hammer formation. So after that it has formed a green candle and one more green candle, and then here it has given a buy trend, buy signal it has given. So you will buy at this level 15,925, and it made a high of 16,000. So hardly 75 rupees it has given, as that day it was not so much movement was there, so it didn't give much of profit. Okay, so when you buy here, your stop loss will be this, the arrow mark, that is 15,847 will be your stop loss. Okay, so in this way you have to trade by using the moving average 10 and 20 crossover, and the super trend buy or sell red and green super trend. Okay, fine. So trading strategy using super trend and moving average. This strategy basically comprises of super trend, 5 to 20 EMA crossovers. So you can use EMA or EMA, I mean simple, no issues. But it should crossover. Then it will give you a correct signal. So 10 and 20 or 5 or 10, you can use either of that. So between 5 to 20, any of these moving averages you can use. And similarly, when the super trend turns red, that is the price above the price, and the EMA is above the 5 EMA, then it is a sell signal. As I've told, when the 20-day and the 10-day crossovers, 20-day crossovers with 10-day, then it will be the sell signal. And you should always maintain the stop losses. Whenever you're trading in intraday, you have to put the stop loss. Without stop loss, you should never trade intraday. Okay, and you can also trail the stop losses. What is trailing the stop loss? Trailing the stop loss is like, if you have bought some particular company at around think that 100 rupees, and if it is going, you have put the stop loss at 90. Okay, and even the risk reward ratio is also very important. So 1:2 should be your risk reward ratio. That is 1% of loss you will be bearing means 2% of profit you should be gaining. So for example, if you have bought the shares at 100 rupees, and you have put the stop loss at 90, and so your target should be 120. So 1:2 ratio it should be there. And if the price is moving upward, if the market is trending, So that time what you can do, if you have put the stop loss at 90 and if the stock price has gone to 120 and you want to wait still because you feel that the market is still going up and the price will go up, that time you can trail the stop loss from 90 to 95 you can do, and you can wait for the higher and highers. Okay, so this you have to keep it in mind when you are trading in intraday. So what are the pros and cons of Supertrend indicator? Supertrend indicator gives accurate signal on precise time. As I've told, it will give trend only in the trending market. It indicates, the indicator helps the intraday traders to make a fast decision. So this will give you the faster decision than any other indicator. It is simple to use and very simple to understand also. I hope you have understood about the Supertrend. However, the indicator is not appropriate for all the market phases. It works best when the market is trending. A super trend indicator can be used in all the sectors, that is in equity, forex or futures, in various time frames like hourly, daily, weekly, etc. So this super trend can be used in intraday also, and also for the swing, positional and short term also. Fine. So this super trend can be used with other indicators also like RSI, that is relative strength index, parabolic arc, MACD, etc. to receive the filtered signal. So you can use with that also. It is not appropriate in all the market conditions. So be clear that super trend will work only when the market is in the trending. Okay. Otherwise this super trend won't work. Fine. So this is about the super trend, how it works for the intraday. Please share and subscribe and comment on our video. Thank you very much. Thank you for sharing and subscribing our channel.